the markets have gone crazy. They continue to rally up. It's euphoria, and that's the perfect recipe. If Bitcoin is going to break out, this is like the case in point opportunity for it to do it, because once fear comes back in, it may keep it from breaking out unless they get that spot ETF approval. The comments by Federal Reserve President Waller, who's a normal hawk, he was saying again, maybe next year we can cut rates if inflation continues to come down. Comments like that, because he's a hawk, meaning he's one of the ones that really is strongly for raising rates, that caught the market's attention, and I think that offset the potential of the weakness there in the Treasury auction.
Governor Waller addressed the economy's trajectory concerns, citing recent data indicating a slowdown. He emphasized that the U.S. Federal Reserve's current policy aligns with the evolving economic landscape. He signaled that the central bank is likely done raising rates. Gareth Soloway, an experienced trader with over 2 decades in the field, observes that the markets are in a frenzy, rallying euphorically. This sets the stage perfectly for Bitcoin's breakout. However, he highlights that if fear resurfaces, it could impede this breakout unless the spot ETF approval comes through. Already on an upward trajectory, Bitcoin witnessed a further surge of over 1% in response to Waller's comments. The cryptocurrency was changing hands at $37,700 when the announcement broke the $38,000 barrier. The continued decline in the US dollar, the increase in gold purchases by central banks as they slow the pace of tightening their monetary policy, and the rise in global geopolitical tensions are all factors that have combined to help gold prices achieve substantial gains recently, reaching the resistance level of $2,018 per ounce, the highest level for gold in 6 months. Soloway still really likes gold, saying it's doing exactly what it's supposed to do. He mentions GDX as potentially one of his favorite charts for a significant profit opportunity. Let's move towards the video to understand what this means for markets. Before we get started, subscribe to the channel and click the bell icon for the latest updates.
I thought yesterday's action on Bitcoin was fascinating. Remember the wedge pattern we've been discussing here? I'm going to zoom in on it. Yesterday during the day, we were above it, but once again, by the close, we were back below the breakout line. So again, I mean, really amazing how this has been working, right? We have these levels here, and we got above it yesterday. We pulled back by the end, so there's no breakout yet. We're back above the level today, basically back above 38,000. But ultimately, we need to see where it closes, and then I want to see whether it confirms. But right now, it continues to attack this. Now, the kicker is for crypto is this, right? This is a risk-on market. I mean, look at whether it was the GameStop chart I showed you earlier, or the Microsoft chart, or any of these other charts. The markets have gone crazy. They continue to rally up. It's euphoria, and that's the perfect recipe. If Bitcoin is going to break out, this is like the case in point opportunity for it to do it, because once fear comes back in, it may keep it from breaking out unless they get that spot ETF approval. All right, couple other charts we want to just quickly go over here. Let's take a quick look at the gold chart. Gold is pulling back a little bit today, basically back to the flat line. Just quickly going over this chart here, guys. Again, gold, we know we had that minor breakout right there. It popped 1-2 today. In the overnight, it was up here, getting very close to the all-time highs. But again, it is stalling out as the dollar is beginning to bounce just a little bit. So again, either way, I continue to be a fan of gold. I've told you guys now for quite a while that gold was doing exactly what it should be doing. To just draw my attention even more so, take a look at this chart on the GDX. GDX, I love this chart, and I've said that. So what do we have on this chart? We have the inverse head and shoulders, okay? And look at the beginnings here. We still haven't broken this out, but we're literally right into that line. This is an amazing chart, potentially one of my favorite charts for a big money move. If you're at inthemoneystocks.com in my verified investing alert service, you know we are long this. We're already up 8% on this trade, and I still think it's going higher, guys. Again, I think the miners are probably one of the last areas that haven't had a big move in this market over the last few years. If you look at the miners, the GDX, compared to almost any other sector, this sector has basically gone sideways to even lower. They are primed for a breakout.
Amid economic uncertainties, the crypto market, particularly Bitcoin, has experienced notable price movements, reaching over $38,000, while U.S. Treasury yields have changed little since Friday. As investors keep a close eye on economic data that could influence the Federal Reserve's monetary policy, the steady Treasury yields play a crucial role in shaping market dynamics. The 10-year Treasury note yield dropped 4 basis points to 4.29%, the lowest since mid-September. Investors awoke Wednesday to the lowest Treasury yields in more than 2 months thanks partly to dovish words from a Federal Reserve hawk. Soloway believes that when yields drop, it becomes tough for the market to go down. He's marked trend lines on the chart. While many anticipate yields returning to 2% or dropping to 1%, he disagrees with that prediction. Let's move towards the video to understand more about this.
The 10-year yield continues to break down. Please take a look at this chart. Pivot high to pivot high. This was a level I actually thought would hold a little bit longer. Ultimately, again, we know that rates are probably coming a little bit lower, but this ultimately I thought would get a bigger bounce than just this right here. That has not happened. In fact, we've broken below. We're now trading at 4.284%. As long as yields are going lower, it's very tricky for the market to sell off. Now, again, the key is how low can yields go? I have a bunch of trend lines here. We can see one right here. We can see here through here. We can see this pivot top through this pivot top through this. Right here is my zeroing in target. And I am a believer that a lot of the market participants, retail crowd, investors, institutions, a lot of them are pricing in that yields will go back to 2%, 1%. I don't believe that. I think inflation, the inflation bug was let out of the box, Pandora's box, if you will. Very hard to get inflation back in the box. Now, it doesn't mean we can't see inflation come in. I mean, oil's come in. A lot of these things have come in. We see housing prices drop. We see I talked about yesterday, the luxury watch market collapsing down. But when it comes down to it, wages are higher. They're going to stay higher for a long period of time. Remember, you can't raise someone's wage and then cut it. I mean, that really doesn't work in society. So wages are going to stay high, which means there's going to be some sort of pressure. Ultimately, my guess is this could be a longer low pivot where we then go sideways like this. It doesn't mean we're going to go back up above here. I don't necessarily think that, but I do think there's a possibility of just sideways chop, which again will keep pressure on the markets. By the way, it was not talked about yesterday, but there was I believe it was 7-year Treasury yield selling yesterday. I believe it was a 7-year auction, and it was not good. There was not as much demand as expected for U.S. debt. Now, interestingly enough, the comments by Federal Reserve President Waller, who's a normal hawk, and I talked about this at the beginning of the show, he was very, very weirdly dovish. He was saying, again, maybe next year we can cut rates if inflation continues to come down. Comments like that, because he's a hawk, meaning he's one of the ones that really is strongly for raising rates, that caught the market's attention, and I think that offset the potential of the weakness there in the Treasury auction. But again, just something to keep an eye on. All right.
The recent release of minutes from the Fed's last meeting, which did not discuss possible rate cuts, adds to the uncertainties surrounding the future path of interest rates. Bitcoin surges over 1% to break $38,000 barrier amidst Fed Governor Waller's unexpected dovish turn. Standard Chartered said that Bitcoin is well on its way to hitting $100,000 by the end of 2024. That concludes our conversation for today. What is your stance? What's next for Bitcoin? Feel free to share your thoughts in the comment section below. If you found this content informative, please give it a thumbs up and subscribe for the latest updates. Thank you for being here with us.